Guys, here we are in 2024. The market will be uncontrollable. Investors must consider that. Since last year, the S&P 500 surged 26% and broke through record highs. The housing market rose for the ninth straight month to new records, and Bitcoin optimism doubled over ETF and Tesla. Machines are slowly waking up, rebelling against humanity. Seriously though, last year was quite gratifying for someone who keeps investing. Many things could happen in 2024 that we must discuss, with several events going to have a big impact on almost everything. So here's my investment strategy plan for historical probabilities throughout next year: stock, real estate, and cryptocurrency signals of trouble. And lastly, what you could do about this to put yourself in the best position available immediately. Like and subscribe, since I'm posting weekly and doing my best to answer as many comments as possible. Doubt me? Please comment, and I'll try to respond. So thank you folks, and much thanks to Rob Bree for supporting today's video, but more on that later. So let's start. Market conditions. What makes this year so different? Finally, we're facing a situation completely different from 2023. Consider that for the last 2 years, the Fed has been hiking interest rates to fight inflation, and now those rates are dropping. It's the first time interest rates dropped since early 2022. Plus, 2024 is an election year, so it's volatile. Another federal shutdown is growing, and in a couple of weeks, kicking will be harder. Down the road further, and most importantly, almost every asset class is near record highs, and uneasy investors wonder how much higher it can go. Everything is added with a weird coating over everything, because even though last year strongly encouraged investment pricing, it won't keep rising forever, not without some obstacles. If you check the market over the past 2 years, it's been flat. So where to start? First, the stock market. Research demonstrates that the average American is awful at investing statistically. The usual return most get is just over the rate of inflation, or don't take the time. This will require some comprehension. The business began in 2014. An insider piece explained why the average investor fails, even loses money, despite rising prices, and for context, this was written while the S&P 500 dropped to 1820 despite one of the best, in retrospect, opportunities to buy stock. Market average investors sold and waited for market recovery, except they missed out on the finest moments of the whole decade. I'm sure we've all probably seen the chart showing what happens when you leave the market during peak days. Over 20 years, but what I found most shocking is that throughout, only 40 days were whether you make or lose money, as they say. Today, missing causes so much harm because those missed gains can't compound throughout the investment holding time. Also, best performing days immediately follow the poorest days, as seen here, and practically even examine fund inflows. Exactly why investors underperforming the market significantly. As you could expect, their inflows increase most aggressively during market peaks. Outflows increase during market turmoil. Investors bought assets regularly that sold overvalued assets were undervalued. So what? This practically implies for 2024. This means why I've always approached the stock market as a long-term investment financial approach. I don't intend 20 to 30 years without touching, hence any daily routine fluctuations are irrelevant. Whatever, once you zoom out, recognize that staying invested is profitable. One analysis method of possible returns is to examine the 20-year rolling period of the S&P 500, which snapshots determine how much money you would have made everywhere. Time frame and surprise found that throughout the past century, no 20-year holding period ever lost money. Worst reality ever 20-year return in 1948 at under 4%, while the best year started in 2001 with market gains. It appears to be over 16% annually. Most years you'll earn anywhere from 7 to 10%, but temporarily. Honest answer: anything can happen. Only certain situation studies reveal that you have 73% in year 1 probability of profit, second year, 80%, 90% in the 5th, and 97% in the 10th year. It implies that the longer stay involved increases the odds. I know you'll profit. Some will comment, but grow this year's election, you must consider that for your video, and I agree. So here's data from history over 70 years. We could election years in the months. The average market declined in October by 1%, but the good news is average. All those losses are created in November and December, erasing losses. Something happened before now more unexpected than that election overall. Years don't hurt either, particularly if we look back to 1928. The market rose 19/23 times throughout the year. Election doesn't mean past performance will resume again every year, but it does signal that by staying invested you'll win more. I too find it often intriguing that Ryan says Dietrich's Twitter info. S&P 500 has always been favorable the year after a 10% decline, and the 10% gain suggests 2024 will be a great year for investors as well, reflecting that alongside the between 1938 and 1963 when the market rises over 20% annually, it's always increased more afterward. This is why I maintain the same belief that it's preferable to dollar cost average into total markets regularly despite how much it costs, and a history indicates it'll be worth more later. Real estate news. An altogether different issue. I hope you're sitting down because made some faults, but before New Year goals, we discussed that if you're like you probably utilize the new year as a way to set goals to improve during the next year, and then follow them so you can perhaps no need to start anew. I'm no saint, but if I could add anything, advice is to check your aims are frictionless. Now things get serious. Housing market future. Interesting for the future housing market look. It's expected the last 3 years have been amazing, tough for buyers of real estate like low rates locked in new and current homeowners. Inventory shortages raised pricing and interest rate hikes destroyed home affordability, but that may change in 2024. Why? Expect the 30-year mortgage rate to decline as the Fed again lowers interest rates, or guess more closely, the 3 rate cuts are coming. Also, in the next year, tremendous pent-up demand to purchase property, and the U.S. Census Bureau predicts 740,000 more homeowners if homeownership rates meet the 1990 level. The projected increase in sales when rates decline throughout 2024 is also expected to spark more post their homes for sale once the gap between them, interest rate and future rates, begins to narrow. But in terms of whether prices will decline, the general agreement is sadly, it'll only get worse. It said more pricey inventory is usually offset by increased market buyers. Overall, the median should be U.S. home prices will rise slightly, rising to $394,000 for 2024, 1.2% rise over 20,123. Remember that doesn't mean prices everywhere just heading up, especially when the property is valuable and localized, but because larger metros addressing affordability issues: Miami, San Diego, LA, Las Vegas, Tampa, Nashville, Austin, potential marginal price locations. Some like Indianapolis, New Orleans, Chicago, Pittsburgh, Detroit. I mentioned Louisville, right? Because I learned the hard way when I visited. Costs have risen to 5% now. Reddit expects median costs to see a 1% decline in 2024. Zillow predicts Morgan Stanley will fall 2%. Expected 3% price decline, and JP Morgan thinks affordability could be settled by 2027. Regarding my current activities, truthfully, I have been swept away by its power and how resilient the housing market is. As I mentioned in January 2022, I wanted to rejoin by buying where I'm living in Vegas through some commercial property. Thus I waited and looked again. I sought a sensible agreement. Here I am waiting to buy. In retrospect, I'm still waiting. It appears I've made some progress. Best choice since commercial Vegas real estate values have decreased 10 to 20% depending on property type, but that means I've spent 2 years looking for a simple deal to buy, and that transaction failed to exist above that. The high interest rates generate cash flow. Negative unless you invest heavily decrease, and the risk-reward ratio merely doesn't work without willing to undertake much work oneself. It implies I'll keep being patient until perhaps, if I'm lucky, the right deal comes along. Subscribe so I can keep you. Finally, we had the alternate investments, last topic worth addressing because people ask me constantly discuss this, and that alternative investments include Bitcoin. I think it's no surprise that I maintain some of my portfolio and riskier. Other investments include antiques, vehicles, and Bitcoin, and I typically believe that if the value rises, well, but if not, that's fine, but I can't say I've stopped paying attention. Watch what happens because Bitcoin is so immensely interesting. Price throughout 2023 raised from a low of 16,500 to over 42,000, making it one of the best performing investments this year alone. Is impressive and significant because the average cost basis for investors is shown as about 33,000, means the average investment is profiting for. In addition, Bitcoin bull tiny strategy is profitable, again 31,000. Thanks for watching. Kindly like, share, and subscribe our channel for more videos.